Hello everyone, I'm back. Thank you for viewing this video. Let's look at the indices and check out how they performed and also the outlook for next week. Just some commentary before the chart. So the US market continues to be volatile as they have gone to resistance and have broken support within the same week. The indices moved towards their respective resistance before the core CPI data was released. In fact, the market was taking the number well until the Fed made comment about the rate hike has erased the gain, or rather the recovery. Then came the talk of war between Ukraine and Russia had stroked fear into the market. Jokingly, I started to suspect that the algorithm trading in the US market has been upgraded with a state-of-the-art voice recognition system like the Siri, and will react immediately when some Fed speaker or former US Defense Secretary is making some comment. Yes, the market sold down immediately during the comment was made. Market sold down immediately when Fed says that the 100 basis points by July, and so again on Friday when the SIR was saying the likelihood of war is high, and for many other instances it had happened before. The market sold off when someone is speaking. Now, that aside, let's take a look at the chart and see how individual indices had performed. Let's start with the Dow. As you can see the drawing that we have made last week, so we anticipated the rebound and the retest of resistance and breakout from it to continue to go higher. But we also cautioned that the core CPI data would create some havoc, okay, or whack some havoc. Yes, it did. So the Dow was sold off on this particular day, especially when the Fed's bullock made the comment. And then came Friday when the market was about to recover. Some interview was going on with the former US Defense Secretary, and the comment of war struck fear and pushed the Dow below its support level at 34809. Okay, so this is not a good sign. Of course, technically, when the index breaks support is not a good sign, but what we can take comfort with is this, where you can see during this period in December 2021, the Dow actually broke its support before recovery to end the year higher. Okay, so there is still a glimmer of hope if we can see a recovery on Monday with a higher opening and a higher closing. That would set the index back to its upward trajectory. So let's see whether this can happen again over here. Now, failure to do so, of course, the key support level is around here at this particular level, which is around 33622 or 33,622. So certainly the market will be looking at the job data next week, and they will be looking at the further development of interest rate hike and Ukraine-Russia war. So the new resistance that was formed at 35832, right, must be tested if there's some recovery on Monday with a higher closing. Then it tests this resistance, this minor resistance, to break out and go higher. Okay, so I would like to particularly repeat what my thought was earlier and echo on some of the comment of other analysts had made as well, is that the market economic data is doing very well, especially all the companies are announcing better than expected, or most of the company announced better than expected results. And these are signs of strength. While interest rate hike may hamper the market movement, but we do not see any recessions coming in, because with all these strong data about the war, let's hope that this war does not break out into a World War III. So if it broke out into a World War III, then all these numbers, all these strong numbers are actually not the concern anymore, as what we are looking at the chaos in the world. Okay, anyway, let's move on to the S&P 500. So the S&P 500 almost hit to its resistance at around 4596 before the sell-off in Thursday and Friday, as it broke its support at 4446 to end lower about 4422. Okay, so it hasn't been a very smooth recovery as I anticipated. There's no V-shaped recovery, and let's hope that it can open higher above its 4446 on Monday, above this support, and then fight back its way towards its resistance at 4596 to stage a magnificent comeback. Okay, so like I presented earlier in February, or on the 30th of January, I would say, the February month is also a mixed month, so we can see some recovery, but then this is not guaranteed, as the market usually has a higher probability to go up in March and April, probably due to the strong growth data that propel the market to go higher. And of course, to note that March we are going to see the first rate hike, and it is very important to see how the market reacts to that. Next, let's take a look at Nasdaq. So Nasdaq, the index tested its resistance over here, 14,497, and got dumped lower to break its support level at 13,847. So it's settled at this 13,791, so just below the support level. So this tech sector has been forever volatile, as the market struggles to digest the impact of the rate hike on the tech sectors. So similar to the other two indices, the Nasdaq has to rebound above 13,847 in order to put itself back into upward trajectory towards its resistance, its major resistance now at 14,497. Okay, moving on to the Asia market, the STI are generally unaffected by volatility in the other markets, as it continues its rally higher and higher to break resistance after resistance. The strong bullish momentum has brought the index above 14,000, or rather, I beg your pardon, 3,416, and another 52 weeks high. Okay, so the next resistance to meet is 3,491, and there might be a high chance for the index to do so if the bullishness continue. So generally, the STI is led by the banks, and the white candles over here are suggesting that there's still a lot of buying pressure. So we haven't seen a true weakness yet until the first black candle appear, like over here and over here. Okay, so if the index start to show weakness, then we got to be careful, especially when some consolidations is taking place. We must take note of potential down, or of course, breaking out, there's no issue as everybody cheers for more profit. Next, let's take a look at the Hang Seng. So the Hang Seng, the market was expecting result from Alibaba last week, but it never came as the result date keep shifting. Anyhow, the index was unaffected and had rallied to 25,000 as anticipated on the video last week, and it went as high as 25050. So during the week itself, we also see some volatility as there are some, selling during the intraday. But the good thing is that the index still managed to close at a decent level, just below 25,000 level. So this is going to be key next week, okay, as the challenge ahead will be how the market digests the sell-off in the US market, and the immediate support to watch is from 24,554 to 24,639. In fact, this is a gap that hopefully the index do not fill up. So if it doesn't fill up, it is not an exhaustive gap, and therefore suggesting that the strength to go up is still there. Okay, and if the index can break out above 25050, then we may have a chance, like mentioned last week, that the index has a good movement to test this 25753 resistance. Okay, so this would be what we are going to look out for next week, the support and resistance. Now, wrapping up, overall, it is a good week for the Asian market, but a poor one for the US market. There were even reports during the midweek suggesting selling the US to buy the Asian market. Well, probably that has already happened as the SDI index has been hitting new 52 weeks high. The housing index has not done too badly itself as it closed the week just below its resistance. So with the US indices breaking its support, it is quite a worrying sign for the short term. And we hope to see some improvement next week. So keep an eye out for the respective support and resistance for the various indices for the next potential movement. So thank you for viewing this video, and I will see you next week.